YouTube. This video is going to go into the asset class series. I'm probably going to have to make multiple videos on this subject because there's a lot going on and it's constantly changing, even today, but we may as well start with the basics. We're going to go over cryptocurrency, and more specifically, this video we're going to touch on Bitcoin because there's a lot to talk about Bitcoin. It represents at any given time roughly about 50% of the overall market cap of cryptocurrency in general. And I'm going to explain why. So in 2008, there was a gentleman, anonymous, could be a group of people, nobody really knows, that's the fun of it, named Satoshi Nakamoto. Satoshi Nakamoto released Bitcoin as well as the Bitcoin white paper. And in the Bitcoin white paper, he goes over his dream for a decentralized peer-to-peer electronic cash payment system. Now, that is not what Bitcoin is today. So when I'm talking about Bitcoin, I'm going to separate what Bitcoin was supposed to be with what Bitcoin turned into, and hopefully explain how we got there. So in the beginning, there was Bitcoin invented by Satoshi Nakamoto, anonymous, and essentially the idea was that you go in and through a cryptographic puzzle very similar to gold, you would mine your own currency. Why do I say similar to gold? Is because in my commodities video, I talk about how commodities are used as a good, or gold, the primo commodity, has been used as a solid backing for currency and a medium of exchange. We always end up moving away from it because governments don't like it. It restricts their spending, and when they go off of gold, it ends up being very, very good in the short term, very, very stupid in the long term because they print way more than they can handle, and then we have to do the whole cycle over again. It usually ends in war. So Satoshi Nakamoto decided through the internet to create Bitcoin. Essentially, without getting too into the details, the way that it works is transactions are thrown into a block, and if you're mining Bitcoin, you have to guess the answer to a complicated math problem. The math problems scale with complexity as there are more people mining, so as to make sure that each block takes about 10 minutes to mine, and each bundle of transactions goes through every 10 minutes. The reason for that is because if it was made back in 2008. So if it's any faster than that, realistically, it becomes very complicated and very hard for all of the computers to come into consensus, which was the entire point. Bitcoin was the first cryptocurrency, but the technology of coming into consensus on who has what cryptocurrency and where it's sent is called distributed ledger technologies. And distributed ledgers have a plethora of applications that extend past cryptocurrency, but since Bitcoin was only meant to be a peer-to-peer electronic cash payment system, we're going to specifically cover that. Now, there are many iterations that have come out past Bitcoin. Many people have attempted to improve on it, but nobody, or the vast majority of people in the space, don't come to a consensus like they do on Bitcoin. Bitcoin has been grandfathered into every single other cryptocurrency ecosystem, and no other cryptocurrency ever will. So Satoshi's vision of a peer-to-peer electronic cash payment system realistically wasn't intended to be the be-all end-all, but it was a proof of concept. And for the proof of concept of being a peer-to-peer electronic cash payment system, it essentially failed. Now, I know that there's a lot of people that might get their underwear in a twist because there are solutions right now to help Bitcoin scale, but as a base layer chain, Bitcoin is far too expensive and takes far too long, and the barrier to entry now today is far too immense for the average person to use it as a peer-to-peer electronic cash payment system. So essentially, the proof of concept for we fast forward from 2008 to today, that proof of concept of a peer-to-peer electronic cash payment system has essentially failed. Now, there have been multiple iterations or forks of Bitcoin because the way that it works is the code is run based off of the code that the miners come to consensus on, and if you can take a swath of the miners, which are people who are attempting to mine by solving a cryptographic puzzle for the sake of bundling transactions in a consensus way, essentially it became too cumbersome in order to scale for electronic cash payment systems. And basically what people would try to do is they would try to take swaths of these miners and change the base code of Bitcoin to essentially try and make it that peer-to-peer electronic cash payment system. And for a good portion of Bitcoin's history, we call it the block wars in the cryptocurrency industry, were people trying to basically sway Bitcoin to becoming more optimized. And ultimately, most of the projects that had become a branch of Bitcoin, such as Bitcoin Cash, and there's a couple other ones I'm not familiar with, they don't really matter all that much. Um, Ultimately, they didn't really succeed because they failed to capture the majority of the audience of Bitcoin miners. So, what we have is Bitcoin as it exists today. Bitcoin today has basically run and adopted a new idea for itself as digital gold. Because the idea of digital gold, or gold in today's modern society, where currencies need to be digital and very quick to operate in modern business, especially over the internet, Bitcoin failed to do that. It takes at least an hour for your transaction to go through. I think that the fees are somewhere up near the $50 range. So realistically, what Bitcoin is good for is you basically store it in your wallet online, and it's uncorruptible still. It's still very decentralized. We can have debates about who's in control of mining, because I think that in terms of Bitcoin, there's 5 companies that control 95% of the processing power, which makes it difficult to call it decentralized. But ultimately, those 5 companies have a responsibility to uphold the status quo on making sure that Bitcoin is the same, because that's basically what people invest into, and it's what makes them a lot of money. So they're not going to change the code of Bitcoin. As much as people love to believe that Larry Fink and BlackRock would like to come in and change Bitcoin, make it greener, it's not going to happen. The moment you do, you kill the golden goose and Bitcoin won't exist anymore. So even though it failed as a peer-to-peer electronic cash payment system, people have sort of adopted it due to the fact that it has survived since 2008. Today's 2025. So realistically, that's 17 years that Bitcoin has been up and operational. And realistically, it has survived multiple attacks. There are so many miners, or I shouldn't say so many miners, I just mentioned that there were 5. There's so much processing power behind mining Bitcoin that realistically it would be very, very, very difficult for even the highest tier governments such as China and the United States to capture and control it. I'm sure they could, but like I said, once you do that, you essentially kill the golden goose that is Bitcoin, because it's supposed to be not people trust that it is what it is, and the moment you try and change it, you're going to ruin it, which is going to kill the golden goose for everybody. Now, Bitcoin, the reason why it's still around and so popular, even though it failed as a peer-to-peer electronic cash payment system, is because it's been grandfathered in. It was the very first cryptocurrency. I believe Ethereum didn't come out until later on, early in the 2010s. So you have a good few years of Bitcoin being the only cryptocurrency, the most widely adopted cryptocurrency, and as a result, you have a lot of people that have essentially adopted it as digital gold into their own cryptocurrency ecosystems. Keep in mind that people are making new cryptocurrencies with the idea to basically fix Bitcoin as Bitcoin failed. There's been an arms race to try and fill the shoes of Bitcoin as a electronic cash payment system. And then there are other cryptocurrencies that specifically just delve into the realm of distributed ledger technologies and attempt to find utility outside of specifically just being a cash payment system. But as far as cryptocurrency is concerned, that's the bit that people love so much, because that's the bit where the money is, right? You invest into cryptocurrency. That's going to be the most alluring part of it. Never mind distributed ledger technologies and building an actual business. Why won't I just invest into cryptocurrency? Especially because of the sheer amount of crazy volatility that the space is known for. Now, roughly every 4 years, Bitcoin goes through these crazy bull cycles where it shoots to the moon relative to where it was before, and then it eventually comes back down and people think it's dead. And this has happened a few times since its inception, but ultimately it's just a function of the adoption of the technology, aka Bitcoin, as well as the M2 rate of money supply, or just the amount of liquidity in any global financial markets. And whenever you have interest rates dropping and the central authorities decide that they want to pump the system full of a little bit of liquidity, Bitcoin tends to do very well, and you tend to see these blow off the top style bull runs in it. But ultimately, it's just adoption over top of the liquidity in the market. And Bitcoin is very, very sensitive, more so than any other asset, or I should say cryptocurrency is more sensitive than any other asset to liquidity in the market. So whenever any sort of cowbell or stimulus comes from central authorities to the markets, cryptocurrencies are one of the very first movers, and they're one of the most aggressive movers. Now, that volatility also comes on the downside once that liquidity begins being taken away from the markets. But ultimately, people have thought that Bitcoin has died pretty much every single time it's gone through any of these bear cycles or liquidity has been pulled out. And the people who accumulate it are the people who understand that it only has a finite cap. So to go back into Bitcoin here, we went over the blocks. It has a finite supply of 20 million, and mining Bitcoin becomes less and less, I shouldn't say profitable, but less and less yield for specifically Bitcoin. Every 4 years, the amount of Bitcoin that you get for solving the cryptographic puzzles gets cut in half. It's essentially a half-life. And it goes through a half-life decay every 4 years, and eventually, sometime after the year 2100, all of the Bitcoin are going to be mined. That doesn't mean that you aren't going to get Bitcoin for mining. It just means that the transaction costs, the transaction fees for transacting in Bitcoin will pay for the miners to maintain consensus on the network rather than new Bitcoins essentially being printed. But the ultimate idea is that it will only ever be 21 million. Now, if you have a fully operational blockchain like Bitcoin is, where most of the world has adopted it, and you can guarantee with mathematical certainty that there will only ever be 21 million, all of a sudden you've created a synthetic gold, or synthetic gold essentially, because it's proof of work, just like gold, where you have to go into the ground to mine it, refine it, and then it's shiny, people want it. Bitcoin isn't necessarily have the shiny property, but it is more finite than gold because we are constantly mining new gold into the ground. Roughly, it's been decently on par with the amount of human beings that have populated the planet is how much gold that we've had out of the ground, but Bitcoin will never increase. There will only ever be 21 million. And I think as of the recording of this video, there's, if not 20 million, slightly less than 20 million of the Bitcoin have already been mined. So there's only 1 million more to go over the next 75 plus years. So people in the cryptocurrency space have essentially taken that and they realize that mathematically speaking, it is a better gold, because they aren't going to be able to mine new Bitcoin. You can tell with mathematical certainty that there will only ever be 21 million, which is why over the course of time, even though it's failed as a peer-to-peer electronic cash payment system and the people who bought into it assuming that it would be that have long since gone, all of the people who have adopted it on the basis of it being synthetic gold are the ones who have come in and scooped it up, which is why you have that narrative being pushed out today, is because essentially based on the people who mine it for the people who buy it, all of those people come into the consensus that that's what it is, therefore that's what it is. Now there are systems like the Lightning Network that are attempting to essentially utilize Bitcoin as a peer-to-peer electronic cash payment system, but you don't do that on chain in the decentralized manner that Bitcoin is known for. Like I said, Bitcoin is powered by ridiculous amounts of computing power regardless of the fact where it comes from. So the Lightning Network, as far as the base consensus of Bitcoin itself, is never going to actually compete whatsoever. You can transact, but putting Bitcoin on the Lightning Network as well as wrapping Bitcoin into any other sort of crypto network that exists, as well as even putting it in an ETF, it just serves to financialize the project. Serves to financialize the product, yes. Much like a gold ETF would, make it far easier to exchange your gold on a New York Stock Exchange. Bitcoin can also be traded on the New York Stock Exchange. Now, there's far more redundancy with the Bitcoin ETF than there is a gold ETF because Bitcoin is already digital, but there are transaction fees and the such. So essentially the process of wrapping your Bitcoin is the process of putting it into an ETF-like system where you have a token representing a value of Bitcoin that is held in a vault that you transact on a more efficient network than Bitcoin itself. So you can essentially trade your Bitcoin from peer to peer without having to pay the ridiculous fees or waiting for the ridiculous amount of time it takes to do so. Although doing that completely kills the decentralized nature of Bitcoin in the first place. Regardless of that, though, there's only ever going to be 21 million. And even if you have Bitcoin wrapped on another network, it's still accounted for on the chain that is Bitcoin, and anybody can go on and see how much Bitcoin is on there. Now, that doesn't stop people from doing double spending, or much like what happened with FTX, they say that they have Bitcoin and they're spending Bitcoin, but realistically, when you're using their app, like the FTX trading app, it says that you have Bitcoin in your account, but ultimately that Bitcoin doesn't really exist. They just claim that you have it and they trade it on their website as if it's real Bitcoin. But the moment that there's a run on such exchange, they collapse, which is why you hear the saying, not your keys, not your crypto, and get your crypto off the exchange into your own wallet. In the case of Bitcoin, you want to get your Bitcoin off of the exchange into a real Bitcoin blockchain network wallet but that's when you open yourself up to the transaction fees. So ultimately, you have different tribes of people that take Bitcoin to varying degrees of serious, as far as people who say, you know, Bitcoin isn't yours unless you have it in a Bitcoin wallet, or the same kind of people that say the gold isn't really yours unless you have it physically in your hand or in your house somewhere. Now, there are certain types of people, especially in the financial world, who would chuckle at you and say, well, I don't need to hold gold. It doesn't trade very reasonably. I'd rather hold gold in an ETF and trade it like that. My clients much prefer that. And then there's systems of trust in place to make sure that there are actually gold in the vault that you're trading and you're not just trading a piece of paper. But yeah, that's essentially what Bitcoin is. There are a lot of other cryptocurrencies, Ethereum and others, that have attempted to fix Bitcoin. And Ethereum was the first that also introduced new functionality to the currency itself. So ultimately, if you take the idea that Bitcoin is just ones and zeros on a screen, Ethereum takes that a step further and says, okay, now we are actually able to program this money and come up with a thing called smart contracts. I'm going to get into that in another video, but ultimately, I wanted to cover the basis of what Bitcoin is and why it is so damn expensive right now. Because it is, and it's because it's being treated like digital gold. And then when you factor the fact that it is digital gold, and when people buy it, they don't really want to sell it, because gold is essentially, much like I said in my commodities video, meant to be a hedge against monetary inflation. So is Bitcoin. It's just that it comes with a lot of volatility on top of that. But the difference between Bitcoin and gold in that regard is it's synthetic. There's only a finite supply, unlike gold, which constantly gets mined out of the ground and eventually might be pulled from space. But we're neither here nor there, so it doesn't really matter. As far as Bitcoin is concerned, you buy it, you're not really going to sell it because it's unless you need to spend it for whatever reason. But ultimately, it just becomes this sort of hedge against inflation that also has the added benefit of an adoption curve on it. Now, if you look at the adoption curve of other technologies, the most recent one being the internet, it sort of goes in an S curve where you have your early adopters, you have your early majority, you have your late majority, and then you have your late adopters. Once we get to about 90% and the dinosaurs are taking their time adopting Bitcoin, it doesn't matter. But fun fact, cryptocurrency, and by and large Bitcoin, actually has a faster adoption rate than the internet itself. So for those of you who think that cryptocurrency is just a scam and a beanie baby and it's not here to stay, I would look at the adoption rate. I would look at the smart people who speak about cryptocurrency, about why it's here to stay. And ultimately, in a world that's moving more and more digital by the day, why a digital gold kind of does make a little bit of sense. This is just going to be part one. I'm going to go over the functionality of it because there's a lot to talk about. There's a lot of different cryptocurrencies, so I'm going to stop the video here. Take care, YouTube.